So you mentioned earlier the idea of what we do during the quarterly reporting period. Uh, so can you maybe just take us through kind of the process of it? What is it that you look for, other than obviously the health check and other things that could go wrong? What do you look for in a quarterly report?
The analysis of quarterly reports is an important part of our research process, particularly the monitoring stage of our process. It's really important because, of course, we only get one of these 4 times a year. In many cases, actually in Europe, just twice a year. And it's a really important way for us to be able to track how our investment's doing. And so we look at these results in great detail. And the key thing we're looking for is we're looking to answer the question, is our investment thesis still intact? And there are a couple of ways we try to do that. The first and the most important way, I think, especially from my perspective as an analyst, is the business progressing in the way that we expect and in the way that we like? So the first thing I do when I see a company reporting is I look at the financial statements and I go top to bottom from the revenue on the top line of the income statement right down to the net change in cash on the cash flow statement, and obviously.
So our bottom-up approach is by going top-down.
Very good, very good. Exactly, and that is a very important way for us to be able to see if the business is actually developing in the way that we expect. And so we look at, are revenues growing in the way that we'd like them to? Are they growing in a way that is expected by us in the street? Has profitability got better or worse? What factors have impacted profitability? And of course, with the free cash flow at the end of the day, how is management allocating that? One thing that we make sure to do every time is to look at our analysis of the previous quarter's results. We literally bring them up on our monitors, and compare this quarter's results with the previous quarter's results. Every single quarterly report I write for you and Aubrey includes a list of issues that we find troubling and that we must keep an eye on. Another thing to touch on what we've spoken about already is a black line of the 10Q versus the previous 10Q. And once the report is together, we discuss that all as a team, and we see or we decide whether we should be making any changes to the scores in our multi-checklist system, and they can be updated. And we can also, and I guess this is the second part of what we look for in a quarterly report, is to see whether we should be making any changes to our assumptions for our DCF, for our valuations. That's broadly revenue growth, margins, and returns on capital. So that's really what we look for.
So we're going through very systematically, volumes, price, cost of goods, sales and marketing, research and development, and so on and so forth, right down the line. And I think that thoroughness, really helps, and sticking to that process really helps us remain consistent. But I think maybe one of the things that's interesting or different about us to a lot of places. A lot of other investors, when they look at quarterlies, they're looking at trying to beat numbers.
Yeah,
it's all about is it going to work this quarter or not? Whereas ours is flipped. It's really, is our thesis still on track? And our thesis imagines going from here to here, but we know there's going to be fluctuations where it does that, but is it within that band, that expected band that we have?
we're trying to test, I think, whether we're wrong every time. So we're
Yes.
looking for disconfirming evidence.
The null hypothesis.
Yeah.
No, absolutely. But it amazes me, sometimes short-term investors, and I know this is a slight tangent, but I remember talking about one tech company with a guy at a pod shop. That's one of the long-short hedge funds. And they were saying, how my bear thesis on the stock. Well, yes, but that's 3 years out. I don't have to worry about that because, that's not going to happen in the next couple of quarters. So, okay, but that's the terminal value. That's where the bulk of the value that you own is. But I guess that's, again, one of the things that makes us different. We are looking as owners, what do we own? Well, we own the terminal value. If you're a trader, you don't own the terminal value because you're trading. You're buying something now that will hopefully be higher later because maybe it's beat earnings. Well, that's not us.
And if it goes down 10%, you're going to be forced to sell it anyway.
Yes.